radio for a really great future. We're talking real money.
Let's play a little game. Let's play a little game here on Talking Real Money. It's called Who Am I? I don't remember life before the internet. Was there life before the internet? I've never made a call on a landline. The way to check everything is to Google it. There's no other way to check stuff. Email? Wait a minute. Isn't that like a telegraph or something? Who am I? I am Gen Z.
That's pretty good.
I don't have I'm so old, I don't even have a kid who's a Gen Zer.
Well, I
do.
I do. I try to place one in every generation, as you know.
Yeah,
so
well, it's pretty good.
carefully.
So what's the next? Have you placed one in the newest one?
Let's just not go there. What do you say, huh? It was kind of a nice Saturday till you had to throw that in there. Yeah.
Gen Z, that's the ones. That's 1997 to 2012, approximately.
Okay, I was going to say, I call these in their 20s, basically, or early 30s, I guess, something like that.
20, no, not even early 30s. Think about it.
They're born between, 2000, basically 2000, 2010. You're right. So they would be basically in their 20s.
Then they're 20. So it's 20-somethings.
And
20-somethings actually do have jobs and invest and all that kind of stuff. But
which is good.
Which is really good. We're glad they're doing it. And they're actually pretty good about doing it.
That part.
They're just not very good at doing it.
And this comes from a length. If you're a reader of the Wall Street Journal, you really should read this piece. It was from last Monday because they talk about 5 Gen Zers and how they're playing this year's volatile market, which is just a horrible headline. But the reason they're playing is that their sources of financial information, 42% from the aforementioned financial websites, but even worse, 42% from social media. It's okay. But let's just go through a few of these. I'm not going to give their full names because I don't want to embarrass them. I gave them grades, by the way, after reading it because I couldn't help myself.
That's the teacher in him.
I know. Max from Waltham, Massachusetts, college student, portfolio 20,000.
So it's Max.
Max. He's a senior at Bentley University, and he signs up for press releases from companies he may want to invest in and then tunes into their earnings calls. Earlier this month, he bought shares in Ferrari because it's a fast-moving stock. No, sorry.
Bad joke. Bad joke, ladies and gentlemen. For those of you who are big fans of Tom's jokes, there's one. We're keeping count.
I try to identify businesses I think will do well regardless of what the external factors are, he says. He's also a finance major. 30% of his portfolio in individual stocks, 60% in actively managed mutual funds, 10 to 20% in a money market.
Okay, the money market could be rainy day money. Don't criticize that. I think that's okay.
I gave him, I'm sorry, Max, but they do say this, D is for degree. So you're going to pass, apparently, but just barely. That's really
D
lousy.
Or a D minus.
Yeah, because that's just not how you invest.
Well, it is
that's
how
investing.
He thinks you invest. But wait, it's because he's a finance major. Because
so he's really on TikTok getting the advice.
That's what they teach. They teach this whole thing about active portfolio management, about portfolio analysis, all of these things that
it's true
that make it more messy and far more confusing. So active management, individual stocks, dude, just make it easier.
I mean, the good news is he has a portfolio of $20,000, and he's 21. That's great.
Great portfolio.
Then there's Julia from Seattle. She's 17. Well, wow, I have a 17-year-old daughter from Seattle. Her portfolio is a little bigger. This is $2,000 she's got in a custodial account at Charles Schwab.
Okay,
where
good.
her dad approves the trades.
Okay, that's good.
Yeah, so far.
So wait a minute, this is not her investing. This is her dad.
Okay.
Okay, so this
family advice is a big part of it, so I got to give him credit for. Yeah, okay. But she has them in 3 exchange-traded funds, one focused on tech stocks, one on dividend stocks, another on emerging market stocks. A little bit all over the place, but I gave her a B- because that's way better than the individual stocks and the actively managed funds.
Yeah, okay, because she is in ETFs, but still it should be just AVGE.
She should have one ETF with $2,000. There's no reason, folks, to have anything more than that.
Dad in Seattle. By the way, we're on the radio in Seattle right now. Julia's dad.
We are.
Just put her in AVGE. AVGE.
GE.
Or
That's it.
AVUV even.
Or DFAW.
Yeah.
One exchange traded fund, you own the whole world. Then there's Michael, 27-year-old, a supply chain manager from Tampa. He has a portfolio of $450,000.
How old? Wait, how old is he?
27.
Holy crud.
Yeah.
450,000?
Yeah, which that's amazing for 27.
Oh my gosh.
His portfolio leans toward tech and artificial intelligence stocks. Amazon and NVIDIA are large positions, smaller stakes in dividend funds. He bought shares of Apple and Microsoft early on because he used their products and still concentrates on businesses he's familiar with.
Yeah,
that's such a, please, if you're listening, that is just no reason to, I drive by Starbucks every day. And yes, I'm invested in Starbucks, but not.
That's not the same as going in.
Oh, I see.
You see, if you went in.
Everybody else here goes in or doesn't go in anymore. You just drive in and get your stuff. It's not the third place it once was. So I gave Michael a C because he gets an A for all the money he's saved apparently, but the portfolio really not very good. So,
all right, more grades coming up soon.
Yeah.
855-935-TALK is our phone number, 855-935-8255. We do have somebody on the line, but we're going to, no, we did. We don't. Never mind. Yeah, do we? Yeah, I think we do.
Nope.
Yeah, we do.
Tom and Don are talking real money.
Do you suffer from financial-flinch reflex? Hi, I'm Don McDonald, and financial-flinch reflex, or FFR, is a widespread condition triggered by watching too much financial news and not having a solid retirement plan. Common symptoms include doom scrolling, yelling at your portfolio, and considering gold bars, crypto, or your brother-in-law's startup. Markets don't cause panic. Not having a plan for them does. The best treatment? A real financial plan. One that's based on your life, not the latest headlines. And yes, we're talking to you, future retiree. Start your financial calming regimen today with a free, no-pressure meeting with an Appella advisor at TalkingRealMoney.com or call 800-386-3004. That's TalkingRealMoney.com, because a plan is the antidote to panic. Side effects of planning may include peace of mind, smarter investing, and fewer late-night CNBC binges. Please plan responsibly. Appella is an SEC-registered investment advisor. See AppellaWealth.com or the firm's Form ADV for more details.
Your guides to a really great financial future. Tom and Don are talking real money.
Well, we're grading Gen Z investors. I'm not. Tom is, based on their portfolios from an article in the Wall Street Journal recently. And so far, we've got a young man with a D- because he bought a lot of individual stocks and active funds. We've got a young woman, very young woman, with a B- because her dad bought her sector
some exchange traded funds. So at least there's some diversification there.
And then we've got a C-.
Yeah.
For owning just
Michael
a bunch of
from
tech
Tampa.
and AI.
Yeah.
All right.
He has a lot of money.
A ton of money.
For that.
How did it mention?
I don't know.
How he got to
really
450 that fast?
No, that's awesome. He says at 24 he had 100. He wants to hit $1 million before age 30, which I think is again admirable. But this is not investing. It's
Must
speculating.
Must have been some seed money from a parent or something. But anyway, moving along. Who else?
Yes,
do you have
moving
there?
along. Yeah, Kevin from Vancouver, British Columbia.
Oh, he doesn't count. He's a Canadian.
You didn't say if this is U.S. dollars or Canadian. Anyway, no joking. Portfolio 130,000. It's a lot of money for 22. It's really good.
A lot better than I did in my 20s.
Yeah, no kidding.
I think I was pretty much negative throughout my 20s.
This is going to shock you, I know. He's invested in individual stocks and cryptocurrencies because he wants to maximize risk while he's still young.
Okay, well, he's definitely maximizing risk. Might as well just... is there legal gambling in Vancouver?
Oh, sure.
Might as well go to the casino then. If you want to maximize risk, buy those lottery tickets. Biggest win so far has been NVIDIA. Yeah. Okay. Not crypto?
So,
huh. How do you rate?
Worst loss came in high school during the crypto craze, says. When his positions in a smaller token fell 95%. You think that would teach him to crypto's not a good idea, but apparently it did not.
He just went to bigger tokens.
Yeah.
What's his grade?
Oh, I'm sorry. Pardon me. I gave him a
I hope it's low.
D.
Yeah, thank you. Okay. Yeah, you haven't failed anyone yet. You're a very nice professor.
I know. Well,
All right, last one.
The curve is keeping them up. Sorry, Mary from Chapel Hill, North Carolina. She has $200,000.
How old's Mary?
22.
Jeez Louise.
People, this is just a lot of money. I mean, this is really good. She has a Roth IRA and buys steadier picks like SPY.
Oh, good.
I think that's the S&P 500.
S&P 500, yeah.
Yep.
That's Spider.
But then she adds to the position in individual stocks such as Apple, Nvidia, and Microsoft. Do you realize, Mary, that you're buying the same thing again? I mean, SPY is like 40% of those 7 stocks, and now you're adding in another. You're just on top of it. It's kind of silly.
That's pretty typical, but
Okay, but listen, let me finish. Because this is hard to. She also has $4,000 in government I bonds as a hedge. A hedge.
Against inflation.
Not for emergency fund, but a hedge.
Against inflation.
No, it's a hedge in case the market goes down. I guarantee it.
That's her bond portion of the portfolio.
But she's 22 years old.
It's okay. You're a little hype. How low did you score her?
I gave her a C.
All right. I think, by the way, I'm going to give.
You're tougher than
I'm going to give Michael an A+, because I don't care how he did it. He got to almost $500,000. I'm going to give.
So you don't care if he lied or cheated or stole?
No. I'm going to give Mary in Chapel Hills a B+, because holy cow, she has a lot of money. Kevin, I'm going to give him an A- because he's young and he's got a lot of money. The Julia, she doesn't even get a score. She gets an incomplete. She's too young. She's too darn young.
She's 17.
She's too young. She's not
my
managing her own
17-year-old
portfolio.
has a Roth and a taxable.
She should not be in this article. I'm sorry.
Guess what my 17-year-old is invested in?
Probably AVGE.
Plus I added a little bit of AVUV just to spice up the small, just to give her a little bit more. I know, just to make it a little because you're special.
Now,
anyway, that's as special as we get in my house.
Can we go to our caller now?
It's disturbing. Oh, pardon me. Sorry, I didn't mean to hold it up for that. Yes,
I was trying to move you along.
I'm sorry.
Let's go to beautiful St. Paul, Minnesota. And Frank, it's your turn. Welcome to the show.
Good afternoon, gentlemen. Earlier this summer, I was working a lot of overtime, and for the first time, I started contributions to my employer group's traditional 401k, and I just got the code from Milliman to get logged on. They put me in the Vanguard Target 2030 retirement. I'm 59 years old. And I logged on and looking at the choices. In addition to the target retirement choices, there are, I think I counted 19 other funds. And I'm just wondering, isn't this a crazy system? How in the world does a guy who repairs transmissions all day, how is he supposed to figure out where to put his money allocated between all these funds? I'm a pretty savvy personal investor for an average guy, and I find this bewildering. I can email Roxy, and she can tell me where to allocate these funds, which is a small part of my retirement funds. But how do average people manage this? I think this is crazy.
Well, it's Saturday, but can I throw in an amen there? I mean, even though normally we do it on Sunday. But
well, no, they're Seventh-day Adventists. You can do an.
Oh, okay. Pardon me. Amen. It's ridiculous. Well, one time somebody brought in from Delta Airlines 600 funds they could pick from. I thought
because they don't want to make it appear there's any favoritism toward anybody.
I get it. Yeah,
but I got to tell you, the 2030, that's that's good enough.
Yeah. Yep.
That's good enough.
If you wanted to get fancy, you could add small cap value.
No,
if you really wanted to go crazy.
That's good enough.
Okay. Yeah, I concur.
Yeah, I mean, the other stuff is just noise, but it's noise because people have asked for the noise. I bet you that there's like a real estate fund in there. I bet you there's some actively managed funds.
There'll be active. There'll be a few index funds.
And it's because people have requested them, so they just want it. I think they call it pandering. Thanks for the call.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
If you want to ask us questions, then Saturday afternoons are the time to do that at 855-935-TALK, 855-935-8255. Otherwise, you can ask questions anytime. Just go to talkingrealmoney.com and click on the contact form. If you record them with your voice, then they go on the Friday podcast. Otherwise, they go to Tom. By the way, speaking of the Friday podcast.
Yeah. I didn't hear yesterday's because I was off doing something else. Oh. I will, though. I'll hear it this weekend.
No, you need to hear it with your grandsons.
No, that was the previous Friday where you recognized. They were thrilled when you mentioned it. That was a week ago.
It was the previous Friday?
Oh, they loved it. Yeah, they did. Because they want me to play that over and over. Yeah, you did. And it was very kind of you. Thank you. Yeah.
So they got a kick out of it. I was hoping they'd get a kick out of it.
Yeah, they did. Yeah, they loved it.
All right. And when I made fun of Grandpa,
famous
they were
now,
good with
they
that?
thought. Oh, they totally.
They're good with that, yeah.
Great, yeah.
Do you have
like
any more of
everybody else in the family?
Those
grandchildren? Yes.
Yes. And he goes, no. How many grandchildren? You have 3 now, right?
I have 4. Well,
4?
4. Yeah.
4. Okay, got it.
Yeah.
Okay. Yes. Yeah. I forgot the other. Yes.
Yes.
I lose count. There's so many.
I know.
How many do I have? Oh, I just have 4. Okay, I have 4.
Okay, then we're even up. But I'm gonna beat you.
Oh, I'm sure you will.
The question is whether I'll live to see them.
Well, no, I don't know that because Tori hasn't gotten married yet. So.
Well, that's what I'm saying. We still got one each on the wild card side, so we'll see what happens.
All right, so if you send those questions in and you type them, then they go to Tom on his little white pieces of paper.
Love it. Yep. And you want me to go to one of those right now, I'm assuming.
I'm just going to let you decide what you thought that meant.
Yes.
Whatever you think I meant when I said that.
That's what you call the setup. Ken Moore, Washington. David writes us, I have very little income this year.
that was his name for a minute, like Ken Moore.
Ken Moore from David.
Ken Moore.
David from Kenmore. Okay. I have very little income this year, but at least $8,000. I don't have cash in hand to make a Roth contribution, but do have money in my regular taxable investment account. Should I pull $8,000 out of that account to make a Roth contribution, or just leave the money there and not make a contribution? In other words, he can only make the Roth contribution if he takes the money out of the taxable account.
It depends. What it depends on is that money in the taxable account money that you have 99.9% definitely earmarked for retirement?
Ooh, that's good. But also, you got to consider if you have to sell something that's going to have a taxable gain in it to create the cash.
Well, yeah. Although, I don't let the tax tail wag the dog.
I know. Okay. Yeah. Okay.
But if it's money that I'm putting toward retirement, if you pay it now, it's kind of like a Roth conversion, but not as painful. You think about it. If you were converting an IRA, you would have to pay the taxes at your income rate. If you sell something and you have a little capital gain, he doesn't have a very high income this year. So
good point.
So his capital gain rate could be 0. Mm-hmm.
Could be because you get up to like $80K.
Yeah.
Right?
So I think if it's money that's earmarked for retirement,
sure.
Get tax-free growth for the rest of your life.
There you go. Because the money goes in the Roth and then it's going to grow tax-free.
Forever.
In the taxable account. I know. In the taxable account, where it doesn't have to come out, nor in the Roth. But the fact is you're going to pay some sort of tax on that.
Maybe.
Capital gains.
Maybe not. Yeah. Depends on his income. He said he's not working.
Touche. Yeah, that may be correct.
So his capital gain rate might be 0.
Yeah. So in that case, it kind of makes it cloudier then because it's very gray.
It makes it crystal clear. Absolutely. If it's retirement money, you take it to the Roth.
Because then it's just going to be tax-free. Fair enough.
Yeah, okay. Because then you know it's going to be tax-free from there on.
That's right. The other way, maybe. Yeah, okay. So go to it, man.
All right. Well, that was the end of the show. Thank you.
Thank you. I guess we answered all the questions and we can sign off now. That's
done everything we need to do. And I think this is right about the right age. I was hoping somewhere in my 70s we'd run it, but I'm not there yet.
You're not 70 yet.
I'm not yet. But if it's a little early, we run out of interest and questions.
Okay. All right. Thank you. Well, we want to thank all of you for joining us.
Our podcast is still very highly ranked.
I know. So become part of that family.
Oh, please. Really, really, really. Here's the thing. If you're just a radio listener, like you're listening to the radio right now in the Seattle metro area, in your car, okay, and you're going, what is this podcast thing? Well, if you have a newer model car and you plug your phone in with one of those little cables that goes into the little cable slot, the USB port in your car, if you have a newer car, you probably have either CarPlay or Android.
On my car.
Yeah. Well, yeah, but you have a new car. Yours does it with Bluetooth.
3 years.
Yours does it with Bluetooth. I have one that does it with Bluetooth. My Armada does Bluetooth. My Honda, I have to plug in. So, But
okay.
you can listen to your podcast even in your car if you plug your phone in.
Good
You
point.
don't even have to plug your phone in. If you have an old car, just set it in the console and listen to it through the speakers, or put one earbud in.
But you should be doing it because there's a lot more stuff than we just do on this show.
Tons, lots.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
Because it's a big, huge, gigantic part of your real life. Money is this thing that fuels our existence, and it's so, so, so important that you understand it better. That's why we've been doing this for as long as we've been doing this. We've been talking, the two of us have been talking about money for our combined,
No, don't do it combined. No, that's going to make me feel
70
bad.
years?
But the real reason we do this is our wives don't want to have us not having something to do on Saturdays.
Oh, okay.
That's the
Is that the
true
only reason? Okay.
Pretty much. Well, not the only, but the majority of it.
So if we want to help you, so give us a call. 855-935-TALK is our phone number, 855-935-8255. And let's go out to the great state of Virginia, the Commonwealth of Virginia.
There
And Virginia
you go.
is for lovers. Carl, welcome to Talking Real Money.
Thanks, Don and Tom. So I'm going to be turning 50 next year, and I know I will be eligible to make catch-up type contributions to my company's 401k, but they will have to go into the Roth option, which my company does offer. I make a income of around $400,000, so pretty tight tax bracket, so that I'm not going to get any kind of tax help from that. But I'm thinking that it doesn't hurt to be able to put more money into the Roth IRA. I do have or Roth 401k. I do have a Roth IRA that I opened a long time ago, so I'll be able to roll that in when I do retire. I think it makes sense, but I just wanted y'all's thoughts on that.
Well, okay, so you would have the money to save either way. The question would be whether it is in the Roth 401k or in like a brokerage account outside of work, correct?
Correct.
Yeah. So I think it's a I'll be sharing that with you next year, by the way, because that's a new rule that came into effect next year. So if you have a income of a certain amount, the catch-up provision will have to go into Roth instead of getting the tax break. So I'll be in the same boat as you are next year. But I'll be doing it. I think it's a good idea.
I'll be doing
Don,
it. I'll be doing it.
I think
No.
you're getting post-tax savings. You're not getting the tax break, but it's better than being in a taxable account.
Right. It's not, in your bracket, it's not the optimal, but it's better than nothing.
Yeah, and I guess because I already have a Roth IRA that I opened 30 years ago, when I do retire, I'll be able to roll the Roth
Move
money
them all together, yeah.
into
That's
that
correct.
Roth IRA.
Yeah.
Yeah.
Makes sense. Yeah.
Okay.
You just don't get the tax
All right.
break up front. That's okay.
Yeah, I mean, I pay taxes on it one way or the other, whether it came to me as income. or
Look at you.
Roth.
Yeah.
Yeah. Again, it's better than a taxable. It's not as immediately beneficial as the deductible, but it works out. I think it's
What
good.
about using that extra money, though, for, say, like a 529? We have two young kids, and we put money in both of the 529s for the kids up to what Virginia gives us as a $4,000 a kid. We can write off on our Virginia state income taxes. But we can carry those write-offs forward. If I'm going to retire in the next 3 to 4 years, would it make more sense to put that extra money into the 529 and carry that tax write-off forward for the Virginia taxes, or put it into the Roth 401k?
Oh, see,
Wow.
now we're getting into what's the purpose of the money.
Yeah.
Because I'm a huge believer in putting retirement first. And I think the more money you can put away that is earmarked, it's just mentally earmarked for retirement, the better. Because once you put it in the 529, it is now no longer earmarked for your retirement. It is definitely for the kids' education or their retirement.
Yeah, because remember, $35K from that can go into Roth IRAs later.
I would
Yeah.
emphasize you as opposed to them right now.
Okay.
Okay.
That sounds good. I appreciate all y'all do for us.
Thanks, Carl.
Thank you. And by the way, speaking of, we went through a certain college orientation for parents the other night. Guess what the all-in cost? I'm not going to say what college.
Is this your school? This is your daughter's school?
Well, one of them.
Well, I thought you guys. Oh, you haven't decided yet.
No, she hasn't. She's only been accepted to one, which is given her a very nice
what's
gift.
the
But all in
cost?
with nothing else, with no scholar. Take a guess. With
This
no
is
scholar.
okay, but no
Nope,
scholarships.
This is just,
all in.
Yep, this is what
room and board, books.
Room and book. Yeah, this is. I mean, you got to get home and back, but that's a separate.
Well, I'm just going to guess 100,000.
91.
Yeah.
Well, I'm just saved 10%. Yeah, I was a little surprised.
No, you
actually,
shouldn't.
but I guess not.
No,
So,
you
anyway,
shouldn't be.
Back to the saving for college thing.
Yeah, I got to tell you,
you've been through this. You're still. I mean, you're just barely out of it.
I'm still helping with the masters.
No, okay. Good Lord. Yeah. Well, never too old to help those children, right?
They never stop asking.
It's great. I'd love it, but anyway, 91. That was a bit. It's not Harvard. It's not Yale. It's just
No. I know it's a West Coast school. It's gonna.
Yes,
she's not leaving the West
and
Coast.
And she's going to California.
And it's going to be California because she doesn't want to be anywhere near you.
I think it's the weather, but I'll allow you to
proximity
say that,
too. No, it's like this is my chance.
I'm getting out of here, and I don't have to see him again. Yeah. Anyway.
Yeah, my daughter didn't go very far. She went to the University of Florida and went, well, this school's too dang big. Then she went, I'm going to go to a teeny tiny little expensive school.
Yeah.
I'm going to go to Mr. Rogers' school.
Mr. Rogers, that's who I was thinking of, yeah. Anyway. So there you go. So I like what you said. To finish the point, retirement should be first.
Yes.
Should be.
Yeah,
because
it should be.
You can't finance that. You could finance college in a number of different ways.
Right.
Yeah.
You can get a low-cost loan for college. Your kid
exactly.
can.
Yeah.
But you
might not love it, but you
have
can.
to make sure that you can cover your lifelong expenses once you stop working. And at some point, most of us are going to stop working. I'm not saying I'm going to, but most of us are. I don't know what I would do if I stopped working.
I'm with you, man, because there's only so many leaves I can get out of my lawn.
Thanks goodness I have those short story podcasts. I don't know what I do with that.
Love those too.
855-935-TALK is our number. Call.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
Well, I got to tell you, I'm just glad the government doesn't have a 467 plan instead of a 457. Then all the tweens would be shouting.
6767?
67.
Yeah, please.
855. Oh, and our phone number doesn't have it in it either. 855-935-8255. Not a 6 or a 7 in the bunch. 855-935-TALK. Give us a call, and let's head down. Well, south in Puget Sound anyway. It's not really south, but south in Puget Sound. Where do you think we're going if we're going south in Puget Sound?
Olympia.
Tacoma. You were close.
Okay.
Andy, welcome to Talking Real Money.
Well, good afternoon, Tom and Don. I appreciate you taking my call.
Our pleasure.
And so I'm hoping that if the question's good enough, I get a follow-up question.
You can have it already.
All right. Thank you. I really appreciate you, gentlemen. So 529, what's the details to make that happen? We've got a granddaughter who's turning 1. I already missed all that for all my kids. However, I don't even know where to start. I've heard people talk about it, but if you were me, instead of getting on the internet like I've done, you can get lost quick. If you were starting at zero, where's the first place you would look?
I know Tom has the answer. I know Tom has the answer, and it's going to be the shortest answer ever given on Talking Real Money.
Well, I would type in Utah 529.
No, my529.com.
Okay, I couldn't remember which the website, but
always forget what.
Is that Utah's plan?
That's Utah's.
Yeah, my529. Are you sure it's .com?
Yes.
Might be .org. Okay. So, because there
you have to believe
it's pretty easy to sign up. It's pretty easy to decide on the asset allocation, which takes no work because all you do there is take the age-based plan for your grandchild, which is really what a great thing to do for a grandchild. And then you're off and running. And they'll figure out how to set up regular contributions, or you can do it any way you like. It's pretty doggone easy. So it is.
The website is clean and simple.
Yeah.
Their costs are low. Their investment options are terrific.
Yep.
It has so many good things going for it. We don't get anything in return from the Utah 529. There are lots of them out there, and it's just really confusing. So we've been suggesting My 529 for ages, and
again, use
loves
the
it.
age-based plan because there's no work to be done by. You don't have to pick the funds. That's all taken care of. It changes over the age of the beneficiary. You're all set.
Yeah, for example, the 2044 plan, which would be about his, because it's a new one, is 65% U.S. stocks, 35% international stocks. It's all stocks. Then it will become more bonds as the child gets
add
older.
bonds in. Yeah, I think my daughter's is like 50-50 now, 50% bonds. So, again, Andy, the bottom line is, so my529.com.
Okay, thank you, because it's so easy to get lost.
Yeah, no, I agree. How do you start? Sure.
Quick story before the question. So years ago, I wanted to get into investing, didn't even know where to start. Asked a friend. Next thing he's telling me about how you get points on your credit card to go to Disney, which is not investing. And then ended up in a whole life insurance thing. And after a while, with the internet, you can do so much more, but you can also get lost in the sauce. So I appreciate you. I've been, you recommended Paul Merriman's books. I've read those. Everything I can get my hand on. So you got to start somewhere, and I didn't know, just didn't want to get lost. But now for my second question. If that question was good enough, will you allow Tom to tell a good dad joke?
No.
At least in the future. Like, I know they have to come spontaneous, but if not now, does that get one in the future?
I have to tell you. I field a lot of calls from men who say they love the dad jokes. I have not heard from one woman who said she loved the dad jokes.
That's a good point, by the way.
Yeah. So what is wrong with us juvenile men? I don't mean to be.
I should have my.
You should have your wife.
Have my wife call in with the request.
Does she want a dad joke? I'm going to take it a lot more seriously if she calls with it.
Yeah.
Oh wait, he's in the. Oh no! Okay, you did this. You are in so much trouble.
This one I can't do because it suggests. Yeah, I love that one. I told somebody, new father, that joke, but I don't think.
Is it not good for the radio? He got out the world's smallest book I've ever. This book measures.
Okay, here we go. This one's
3
good.
by 3
somebody
inches.
gave this one to me. I love this one. Every fool can make a baby, but only a man can raise his children. Think about that one.
I don't. Is that a joke?
I don't know. The other one I wanted to tell, but I don't want. I just don't want to get in
joke?
trouble. So I don't. That's what it said. So
Okay.
I always liked that one.
No, Andy, do you understand it? Because I'm feeling kind of stupid.
I'm thinking it's more of like words of wisdom versus a joke.
It says it's a dad joke book.
No, it's not. Doesn't say. No, this is not a joke book.
Oh,
there
what
are
is
jokes in it, but there's a whole bunch of different things.
All
in
right,
here,
this is a terrible
Like
book.
wisdom for dad.
Yeah, exactly.
All right.
Somebody gave this to me on Father's Day many.
It's not a dad joke book. No, don't. No, stop it.
Okay, all right. Okay,
I'm making Andy go away now. You got to go, Andy.
Thanks, Andy.
Yeah.
Appreciate your support.
All you do is cause trouble whenever you come on the show. Look at you.
Oh, I'm trying. There was another one in here that I really like, but
I'm going to take a risk and go back to Tacoma again. Don, welcome to the show. Oh, wait, no. Is it time for a spot already? Hold on, Don. We're going to get you right after this break because we got to do the stuff. You know, the money stuff, the traffic stuff, that kind of stuff.
Yep.
It's really important. We do all that or somebody gets mad at us.
Yeah.
And so you need to keep your joke book in the studio, dude.
Tom and Don are talking real money.
Do you suffer from financial-flinch reflex? Hi, I'm Don McDonald, and financial-flinch reflex, or FFR, is a widespread condition triggered by watching too much financial news and not having a solid retirement plan. Common symptoms include doom scrolling, yelling at your portfolio, and considering gold bars, crypto, or your brother-in-law's startup. Markets don't cause panic. Not having a plan for them does. The best treatment? A real financial plan. One that's based on your life, not the latest headlines. And yes, we're talking to you, future retiree. Start your financial calming regimen today with a free, no-pressure meeting with an Appella advisor at TalkingRealMoney.com or call 800-386-3004. That's TalkingRealMoney.com, because a plan is the antidote to panic. Side effects of planning may include peace of mind, smarter investing, and fewer late-night CNBC binges. Please plan responsibly. Appella is an SEC-registered investment advisor. See AppellaWealth.com or the firm's Form ADV for more details.
For your real life and real future, Tom and Don are talking real money.
I've got one.
But I've got one. Here it is.
Yeah. Okay.
I started investing in stocks. Chicken stock, beef stock, vegetable stock.
Okay.
Now I'm a billionaire.
Oh, I like that, but this one's better.
All right.
This from Mark Twain.
Yeah.
When I was a boy of 14, my father was so ignorant I could hardly stand to have the old man around. But when I got to be 21, I was astonished at how much he had learned in 7 years. That's good. I like that one.
Let's go to Tacoma. Don, welcome to the show.
Don, save us.
Hey, how's it going, guys?
Good.
I got two questions. One is, I got a 50-55 stock portfolio of VT, AUVU.
AVUV.
And then bonds and...
Wait, is it AVUV?
Yeah,
AVUV, yeah.
yeah, AVUV, thank you. And a bonds and CD ladder, 5-year CD ladders,
Okay.
for the other 50-45%.
Mm-hmm.
Is that good enough?
Yes.
I won't need the money.
Sure,
I don't
that's
anticipate
fine,
needing
yeah.
the money.
Yeah, it's absolutely
There's nothing
fine.
wrong.
It's lovely.
Yeah,
I
yeah.
like it.
Why not? Yeah. Simple.
Yep. Simple, straightforward, gives you a value and small tilt. You've got the very high degree of safety of a ladder. I love it.
Yeah.
I like it. I'm good. What's the second question?
Second question. Got a grandkid. Got about 8,000. I told him I wanted him to start a Schwab account with 5,000. On the stock portion of this, you have another bonus fund that takes care of the small cap as well as it takes care of VT and the small cap altogether.
Yeah,
Can you give me the letters
AVGE.
again?
Sure. AVGE. It's a global fund that holds, all those stocks. It has a tilt to small to value, some other factors that the academics believe in. Sure. That's a good choice.
Excellent. Thanks a lot. Keep doing it. And if the Tom, keep off the jokes.
Oh, there's an honest comment of the day if we ever heard one. Okay.
My goodness,
All right, good
Don,
enough.
you're my best bud now.
you.
The
Well
Dons
done.
are sticking
Well
together. It's the
I'll take
dawn
it.
of a new day.
Yeah. Okay. Fair enough.
It didn't dawn on me.
No, it didn't dawn on you. Oh, okay. Okay. That just became the worst joke of the day. I'll give you that. So.
Oh, golly. Well, it's been a couple of hours, and I think I'm getting tired.
Yeah. A little punchy.
So we probably should end the show. What do you think?
I think you're right. Sure.
Okay.
Why not?
So a
Enough's
couple of
enough.
things we want to share with you. One, do you have questions? Anytime. You can send us questions at talkingrealmoney.com on the contact form. It's really, really easy. You can even just speak them and save your poor fingers from all that wear and tear. Just talk. Or
Come
you can
pieces of
type.
paper. Oh, the other one, the typed ones.
Yeah. Or if you really need help, it was great. I was looking on Spotify, and people make comments about the show, about the podcast on Spotify. And one guy said, they're not lying about the free meeting. He goes, I got a meeting, I think it was with Luis, he said. And he goes, I thought I'd just get an hour, but I got 2.
Yeah, I think some of the advisors get into these situations and they think, I'm going to keep talking to you. So sure.
Yeah. So you can get those free meeting things.
Yeah. We got some comments last week from somebody saying all they're doing is pitching clients, and it's like that's not what we're doing. We're really trying to help people. Do we want you to be our client? Sure. Is it necessary? No. So go to talkingrealmoney.com, talkingrealmoney.com.
The opinions and views expressed on this podcast were current on the date recorded.
Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone.
This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction.
Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor.
Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services.
Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.